The FX market has been in turmoil this week with Trump's tariffs, which of course dragged the US dollar lower. But can this upcoming week's data offer it any support? It's the week ahead. Thanks for joining us at XM.com. I'm Cristina Marujos, and with me is our lead market analyst, Rafi Boyajian. Rafi, it's definitely been a memorable week for the Forex and stock markets with the imposition of tariffs and, of course, the immediate and strong retaliation, especially from Canada. Now Trump appears to be backtracking and announced a delay to some of these tariffs. However, markets are still uneasy. So what does this tell us about investors' risk sentiment right now?
Well, Christina, like you said, markets are quite uneasy at the moment because Trump seems to be changing his mind from day to day. For example, we just had, of course, Trump announcing some delays to some of the tariffs that he'd announced, that 25% tariffs on Mexico and Canada. So a large chunk of those imports will now be exempt from the 25% levy. But overall, it has to be said that markets were not expecting for Trump to go as far as he did with the whole trade war, particularly against his closest trading partners such as Mexico and Canada. So this has really kind of raised the stakes, and it's really kind of sent shivers down investors' spine because I think it does really take things to the next level. And of course, this latest delay, we don't know whether it's going to be temporary or whether the three nations, North American nations, will be able to come to some sort of permanent deal. And then, of course, we still haven't had the reciprocal tariffs. Those will be announced on April the 2nd. And then, of course, when it comes to China, we could possibly still see, gradual increases in tariffs. Maybe like we saw with the 10% already now, we had a second 10% round. Maybe there's going to be a third round as well. So there's a lot of uncertainty. And uncertainty, we know, is not good for businesses. It does create, it does basically put off companies from investing. So low investment leads to lower economic growth. It also means to fewer hiring. On top of that, we have, of course, those big job cuts from, the government layoffs from Elon Musk's Doge department. And so investors are kind of turning quite pessimistic when it comes to the US economy. And that's why shares on Wall Street are really struggling right now. We're seeing huge losses over the past week for the main indices. And that's why this latest reprieve from Trump hasn't really provided much of a boost.
Well, it's definitely a developing story. Now let's look at this upcoming week's calendar. US CPI for February is out on Wednesday. We've already seen inflation tick up slightly in the past few months. Do you think this pattern will persist in this report? And if so, what would that mean for the US dollar?
So indeed, we've seen CPI gradually head higher over the last few months. It did reach 3% in January. Potentially, we could see a slight pullback to 2.9% in February. Core CPI, of course, had risen to 3.3%. That might come down to 3.1%. And so if this is the start of a new downward trajectory for inflation, that's, of course, is going to be good news for the Fed and for the markets, because it means the Fed might be able to resume its rate cuts in the near future. And it would also reinforce the current market bets where we've seen rate cut expectations rise to 75 basis points, which means 3 rate cuts versus the 2 signaled by the Fed in its previous dot plot. But we shouldn't sort of forget about the other inflation data coming up next week. We've got the producer prices coming up a day after the CPI report. Also, at the end of the week, we're going to get the University of Michigan's Consumer Sentiment Survey. In this survey, we also have some inflation expectations, which were kind of worrying in the previous report. So this is going to be quite important to get an overall view of price pressures in the US economy. And should it all should the inflation data point to some subsiding inflationary pressures in the US, we could see the US dollar accelerate its declines. On the other hand, any upside surprises in the CPI data, particularly given after the dollar's recent losses, we could see quite a decent, potentially quite a decent bounce back.
And finally, Rafi, let's cross into Canada. The Bank of Canada meets on Wednesday as well, and rate cut expectations have spiked since the trade war rhetoric intensified. Do you think the BoC will deliver another cut this week, and where would that leave the loonie?
So we are expecting another rate cut by the Bank of Canada on Wednesday, probably a 25 basis point rate cut, but it's not fully priced in, so investors aren't too sure whether we will get another rate cut. If looking at the data alone, it does look like, or at least the Bank of Canada should be thinking about pausing soon because we are seeing a fairly decent rebound in Canada's economy. Employment has been growing strongly in recent months, and inflation appears to be bottoming out. So probably the Bank of Canada, even if they do go ahead with a rate cut, they're probably going to signal maybe it's time to pause in the near future, or potentially open the door for a pause. The problem, of course, is the Trump's tariffs, because even given this latest reprieve, Canada is still going to be its exports are still going to be charged higher duties as they enter the US. So potentially there's going to be some hit to the Canadian economy. This potentially is going to it's going to hurt Canadian growth. On top of that, we know that Canada's Prime Minister Justin Trudeau has been retaliating as well. So some US goods will be facing higher Canadian tariffs. So there could be Canadian inflation could be going up in the next few months. So this puts the Bank of Canada in quite a bit of a dilemma. So it's going to be interesting to see how the Bank of Canada is going to kind of navigate this tricky situation. So potentially, though, when it comes to Wednesday's meeting, if we see the Bank of Canada, at least for the time being, suggest that maybe there could be pausing soon, that would definitely be positive for the Canadian dollar.
Rafi, thanks so much. This was The Week Ahead at XM.com.